So we have a couple suggestions in terms of how to deal with a consumer who states carte blanche, oh, I can't predict the 2018 income. And a good idea, I would say, is estimate based on what you know now, right? Maybe the album will go platinum, maybe you'll win the lottery, but obviously we don't have a good way to bank on those contingencies. So let's instead estimate based on what you made last month, the past few months, income you expect to earn in 2018. So whatever category makes the most sense, let's estimate based on what we know now, and we can always adjust this. We're here year round to help you make adjustments if anything changes. A consumer who's currently unemployed, it's very important to let them know that though that might be the current situation, we're trying to estimate for all of 2018. So if they're looking for work and we're expecting that they'll get a job, why wouldn't they? We can estimate according to that. So some good ideas to look into is how many months they expect to be unemployed, how many months they hope to be employed, what their average salary or hourly rate has been at previous jobs, and their job history, right? So you can usually cobble together a good estimate based on those factors. Another thing to keep in mind is that unemployment is taxable income. So if they're receiving unemployment, we can count that and then estimate around other information, their past job information, to come up with what a good estimate would be for the moment. And again, once they start working, they come back, we adjust it. The self-employed sometimes, of course, see a lot of variability in their income. So one idea is estimate based on the past 3 months, the past month, the past year, whatever they're comfortable with. And then you can give them a self-employment ledger so they can track their income and their expenses just to see if we got it on the nose. And of course, if we did not, they can always come back and we can update it. The self-employed, as a quick note here, we get to use their profit after their expenses because they're self-employed. So of course that means their business expenses, which is not your job to assist with, but if you needed someone to give an explanation of that, grab one of our tax experts and they can help with informing that self-employed person how to do that. All right, so we're looking at Mary again. Mary has 2 pay stubs. If you have the activity packet, you have those. And what I really want to emphasize here is it's not unusual for a consumer to walk up to you and just give you info like this. And you can see we have 2 pay stubs here. It shows she earns 15 an hour on this pay stub, which is for a 2-week period. She worked 45 hours and earned a total of $675. You can see her year to date. These are September pay stubs. If we go back one, here she worked 37 hours over the past 2 weeks. So certainly there's a way to approach this. If all I had were the pay stubs, here's how I would figure out this person's income. This is a very Health and Human Services sort of approved counselor method. So you would add the 2 pay stubs, divide by 2, and this would give you the average. So these 2 pay stubs averaged out give her an income of $618.75, which you can see looking at those 2 other pay stubs. It's sort of in the middle of those. If she was paid biweekly, so if she was paid every 2 weeks, you would multiply that number by 26. If she was paid twice a month, you would multiply that number by 24. And you can see you get an income estimate of either 16 or 15,000 depending on which of those 2 pay periods represent her. So this is like the official way to do this, the way to use pay stubs to do this. However, here's what I recommend. Ignore the pay stubs. You have a person with you. Talk to the person, right? Are you paid per hour? How often are you paid? How many hours do you usually work? Do you work all 52 weeks of the year, no time off? Is this your only income? So rather than having to rely on paperwork that may not be representative of 2018, it may not even be very representative of her usual employee schedule, you can sit down and figure out if she was working 16 hours per week, what would the income estimate look like versus 20 versus 22? And this becomes a conversation with the consumer. It's not unusual for people to give you a range. How many hours do you usually work per week? 16 to 22. So you'll notice that here I've estimated it all 3 ways. So I've used 16, 20, and 22. And this is up to the consumer. If this consumer tells me, it tends to be closer to 22, that might make more sense. If it tends to be closer to 16, that might make more sense. But if it's usually 20, which is almost smack down the middle would be 19. But if 20 is the estimate, that is just fine. And you can see that while there is variability between these different estimates, they're not massively different. So going too crazy trying to figure this out to the last dollar tends to not be a good use of your time. We want to come up with a simple estimate. Just to see what the estimate looks like when we translate it into subsidies, remember that initially I had said Mary was earning 15 and she was getting a $15 per month premium after her tax credit as a result of that. So if we translate those three estimates into what the monthly premium winds up being, you can see the very first line shows that her monthly premium would be 11 if we estimate her income at 16 hours per week for 52 weeks. It would be 16 if we estimate at 20 and 43 if we estimate at 22. Now I can definitely appreciate that 43 is quite a bit more than 11, especially if your income is in this range. But what's important here is that this can always be adjusted. And 11 versus 15 versus 16 is not a huge difference. It is different, but the consumer, if let's say we wound up estimating on the high side the 17,160, if she paid that for a couple of months and felt it seemed a little high, she could come back to us. We could revisit the estimate and adjust it downward if necessary. And that honestly might be the appropriate estimate, and it might seem a little high because she needs some budgeting help, which would enable us to refer her to a financial coach. So, whatever the estimate winds up being, the consumer will be able to monitor how affordable that seems to them. And if it doesn't seem affordable, they can come back to us and we can revisit that estimate. So the emphasis here is that overthinking an estimate doesn't tend to be very productive. So some pro tips with income. So firstly, what I always recommend is get an estimate, turn it around and show it to the consumer and ask them, does this look about right? They will have a reaction to that. It'll either seem too high or too low, or yeah, that seems about right. And if you get that seems about right, that's what to go with. If it seems a bit too high, we're working backwards. All right, is there any vacation that you take off that you're not telling me? And it may develop that, oh yeah, here's why. Or if it seems too low, there may be some other income they forgot to mention until now. So I think we're inclined to overestimate because overestimating means the consumer won't owe back any of this tax credit when they file taxes. However, the difficulty here is the insurance might be more expensive than the consumer can afford, and using the care might be more expensive if we've bumped the consumer into a more expensive cost-sharing bracket. So overestimating can have advantages and it can have disadvantages, and you always want to be mindful about where an estimate puts the consumer on the FPL chart. Okay, so it's not a bad idea to look against that. If you're going like $1 over and bumping them from 94% cost sharing to 87, that might be worth considering, right? That might be worth revisiting. So I have a couple of different examples in the activity packet, and what I want to really emphasize with these two questions. I have Lawrence, he's single, working in an auto repair shop. He says he makes $2,000 to $2,500 per month. And I ask, what questions do we need to ask? And the first thing I want to call attention to is consumers really like to give us income information in a range. You can see that in question 1 and in question 2. And the question really to follow up with this consumer with is, what dictates that variability? Why is he giving us that range? It might be that the $2,500 is his income before his deductions are taken out, and the 2 is after, right? And then if he's a W-2 earner, we would want to use the gross amount, not the adjusted amount. So that's very important. It may be that certain months it's 2, certain months he does overtime. Maybe he does overtime only 3 months a year, right? So why he's giving us a range is the question. Also, if you say, should we just go right down the middle? Should we go with 2,250? And that makes sense to him. Go with that. You don't need to overcomplicate it. Another idea would be to ask, are you paid by the hour? How many hours you average per week? And to backwards engineer how that consumer came to that estimate, right? Because there might be all kinds of contingencies he's not considering. Below that, we have an example of Jessica earning between $15,000 to $20,000. And again, this is a woman who's self-employed, right? So it's very possible that the 20 is before her allowable deductions and the 15 is after. And if that's the case, we actually want to use the 15. We want to be considering her income after her allowed deductions, her allowed expenses. We have a consumer, an example of someone looking for work. We want to ask him what he normally earns, and then if he gives us unexpected income, we can go ahead and estimate his income for 2018 based on that. And then finally, we have a consumer, Jan, who has Social Security disability insurance and receives a monthly income of $1,338. She says she's heard that to qualify for subsidies, the marketplace only looks at taxable income, and she says her disability isn't taxed. So firstly, that is basically technically correct. MAGI is modified adjusted gross income, so it's taxable income, but the part that Jan is misunderstanding is that it does include certain Social Security, and this SSDI is one such item. Now, she is maybe worried that if she accepts a tax credit, her SSDI will be taxed. It will not be. So before the ACA, this consumer would not have had to file taxes. She still does not, but to get a tax credit, to get the subsidies, she has to commit to filing taxes. Now, technically, she has no taxable income. So normally a CPA would tell her, oh, you don't need to file taxes. You're only getting SSDI. She does now, if she wants a credit, she would need to file taxes, but that doesn't mean she's actually paying any taxes on this income. So that's how I would address this concern with the consumer. Okay, so a major provision of the ACA that we talked about earlier was the expansion of Medicaid. However, in Texas, we do have a gap here because Texas came back and basically made the decision not to accept the federal funding. And so we have a hole in coverage that was supposed to be covered by Medicaid. My shorthand for Medicaid is that a person upon whom we convey the benefits of citizenship, so citizens, long-term green card holders, and individuals with what's called humanitarian status should have been in Medicaid. However, we don't have it, so they get kind of left out in the cold. However, the immigrants who would not have been eligible for expanded Medicaid do get subsidies down to 100% of the federal poverty level. So there's sort of an inverse way to understand this. It seems very backwards when you first go into it, but we have a couple of great tools to help you figure this out for consumers. So first and foremost, when you're working with a consumer who's a citizen, a long-term resident, or has humanitarian status, you want to state the facts. You want to let them know that because Texas has decided not to expand Medicaid, we need to be able to estimate your income at or above 100% of the federal poverty level for 2018 for you to qualify for subsidies. At the estimate they gave us, you're not going to be eligible for subsidies. I always follow up with, is there the possibility of any more income? What we need is a justifiable estimate, all right? So if the consumer is like, yes, I could do that. I could work more hours. I could clean an extra house. I could take an additional client or look for more gigs. Let them tell you how much more income. Try to avoid saying, can you do $1,260? Because that is not ethical. We want them to supply the estimate. Now, if the IRS has no record of them ever earning that $1,260, they will probably need to submit proof, but they will have 90 days to do it, and we can assist with that. There will be consumers who cannot get out of the Medicaid gap. So for example, we have an artist living with several roommates who's never earned more than 10 grand a year, and that's a big sort of hint for us. If they've never earned above 100% of the federal poverty level, it's unlikely they're going to have a justifiable way to estimate above unless there's been a change that allows us to estimate above. So this person works part-time doing odd jobs, art, and she expects an income of 8 grand. Her mother gives her $200 a month to help out, and when you ask if she could earn more, she is very adamant she won't be able to. Explain the facts, let her know that at the estimate she's not going to be eligible because we have this gap in Texas. You can complete the application for an exemption number. You can show her full price plans. She will very likely not be interested. It will be too expensive, and I recommend setting that expectation that I'm happy to show you full price plans, but they will likely not be affordable for you. You can give her a resource card, which I'll show you now. On the left-hand side where it says local clinic sliding fee scale, those are clinics that will see her with or without insurance. And that might be a good source for her for primary care. If the income changes, she should come back to us because we might be able to enroll her. And if she's a Travis County resident, we will follow up with her after December 15th to figure out if she's eligible for MAP. And I just want to note here that the $200 from her mother is a gift. It's not income, so it won't count towards her total income.